Hi, and welcome to the Venture Capital interview series. My name is Steve Torso, and today I've got Maxwell, the managing partner for the OENO Wine Whisky Fund. Welcome, Max.
Hey, Steve. Thank you so much for having me.
Now, I'm pretty curious about this conversation. I know we've sort of spoken previously, and I'm pretty excited to bring this to everyone because, when it was one of the first time I actually saw you at our events, I sort of didn't really understand it as an investment opportunity. But the more time we sort of spent communicating with each other, it's actually quite unique in how it sort of presents itself from an opportunity perspective. So, as a starting point, give us a bit of a history to OENO.
Yeah, so OENO was founded by my business partner. His name's Michael Doa. He's actually the number one wine investment advisor in the world, 2022 and 2023, in the Spears magazine, which is a magazine designed for providing, the top recommended advisors in all classes to high net worth individuals. And, he founded the business about 9 years ago. We've been doing this for about 9 years now. OENO, OENO is Greek for wine. So, there's deep philosophy in the business, and everyone in the business is obviously avid wine drinkers, not just in the purpose of getting drunk, like what most Australians, but in the purpose of the art and the craft of the asset. So everyone definitely appreciates these assets for, wine and whiskey, for the art, the craftsmanship that goes into making them, and that is where the value's created, right? The value's created in something that's being made that's really, really special. It's scarce. Every year is different. The vintages this year is different to last year. Last year, they might not have as many as this year. So it really, really is a delicate industry to be in, even though it's a huge industry. It is the top 1% is what we talk about when we talk about investment grades, wines and whiskeys. And then that is a very, very delicate part to be in.
Now, what I found fascinating when you were describing this to me is I found it fascinating when you basically outline what is the process that you guys would go through as part of selecting different wines and whiskies. Can you take us through that journey?
Yeah. So we have more than 100 full-time people, around the world in 4 continents, 6 languages, because these assets are international assets. They transcend culture, language, barriers, boundaries, or whatever. It's appreciated all around the world and consumed, all the best restaurants all around the world, right? And we literally have a wine team, across different parts of Europe in different languages, Spanish, Italian, English speaking, that their job is basically to and also French speaking, to fly around the world, meet winemakers, look them in the eye, shake their hands, really, really understand, is this a producer that we want to, have recommend to our clients to invest in, right? I'll give you some examples of some things that they look at. They look at, obviously, things like climate change. There's some talks that, some of the best wines that were made in the 80s and 90s might potentially never happen again. Like some of those really, really good vintages. There's also talks that, like, for example, champagne, like a lot of champagne producers even considering and looking at, I think some of them actually have bought land in the south of England because, the weather is just changing, throughout the world and making it not as easy to produce what they wanted to produce where they wanted to produce it. So that's one thing that we look at. We also look at, for example, there's a few producers that we invest in that's they're backed by like big private equity firms, and the private equity firms basically want to go in there, supercharge the marketing, the sales, give them all brand new vineyards, help them buy more land because they've got a really, really good winemaker there. So then we thought, yeah, why not have our investors piggyback on the private equity's money to have these bottles appreciate in value and things like that. So, another example, Scotch whiskey exports increased by 37% last year. 37%, right? So almost 40%, more than a third. And what you need to remember is that when these assets are exported out of Scotland into other parts of the world, they usually cost like double, like if they can be consumed in places like America, especially, right? So it's just that there's more volume being exported. They're being exported to places where people pay more for it, so that's real solid demand, right? And then in the same article, it wrote that, India is looking at reducing their import duties by 150% of Scotch whiskey, which means that exports into India could double, and it's already a large amount. So I guess what I'm getting at is that the world's just drinking more and more of this stuff, and the world wants to drink more of this stuff. And, as an investor in the hard assets, the bottles themselves or the barrels, you're on the sell side of that, high demand. Yeah.
So in a market, obviously, there's always two sides, right? There's supply and demand. And I think one of the things that you really talked to me about that you guys have done well is just given the 80 years of experience, and some of the top members of your team that are actually doing this sourcing, effectively what they've got is the capacity to have almost like a sort of information arbitrage when it comes to the selection process. So what I'd love to, what I think would be useful to explain is what are some of those supply issues that affect, values of some of the different wines and whiskies that you're selecting, and explain how sort of you can, I suppose, articulate that information arbitrage you get because you are so close to the producers and to the source of the products.
Yeah. So as an example, our director of wine, Justin Nock, has been judging the Decanter World Wine Awards since 2005. So it's almost a bit like, just having the key source of information in-house, right? And the thing about the wine and whiskey industry is that it's enormously inefficient. There's no like Bloomberg watching all the numbers and reporting the data and all that sort of stuff live.
Or live reporting.
There's zero live reporting. Like we could very easily get a phone call from a producer saying, "Hey, look, I'm going to increase my prices next year. Now's probably a good time to get in." And that does happen. Everything's off market. Everything's so if you work with the right people, you can get access to that insider information. It's almost a bit like if you're the one person who went to school with Banksy and you could just get a hold of if you could be the first person to buy one of his art pieces, one of the first person to actually be offered it, and then you could say no, they pass it to the next person. But if you're first in the line on the inside sort of circle, you've got an arbitrage there. And so it's a bit like that, so we're sort of first in line in a lot of places, not everywhere, but enough places to make a difference after our team, the relationships that our team has with the industry goes back 25 years, so to compete with us, you got to start 25 years ago, right? So that was answering your first question. What was your second question?
I was around the information arbitrage and then some of the supply issues that can affect some of the producers that impacts pricing.
Yeah. So it's really simple, right? If you want the price of your asset to double, more or less demand has to double, or you got to wait for 12 years of inflation, right? Or supply needs to halve, right? And the beautiful thing about these assets is that it takes 10 years to make them, 10 seconds to open them to drink, right? So you've got 10 years to make, 10 seconds to open to drink. So supply can drop very, very quickly once it hits its sort of like peak drinking window, particularly for wine. So we look at that. We look at when is this going to hit its peak? When are people going to start to drink it? And that's basically how there's a convergence to the value increasing according to the scarcity of it, and because it has a natural life cycle, and it's beautiful. And whether or not someone drops a bottle of wine, breaks one or whatever, or they lose them or they forget about them, they're taken off. They've been taken off the market. Supplies drops. And if you're still there holding a pristine bottle, be able to sell it back into the market, you could do very, very well. I'll give you an example. So if you were to, so what we're not doing is we're not buying like $100 bottle and hoping that it goes up to 150. That's definitely what we're not doing. What we're doing is we're buying a $100 bottle when it reaches its peak. And let's say it's taken 10 years to get there. Then we then look at buying the vintage 3, 4, 5 years younger at ideally, say, 30 cents on the dollar. Does that make sense? So we take it off the market, we buy it when no one wants it, when it's too young to drink, and then we sell it back into the market at a premium when supply is scarce, and like the restaurants and hotels, Marriott, all that sort of stuff, all those sorts of guys want it. So it's not as if we're buying a house and just speculating the price goes up. We are essentially buying a fixer-upper, fixing up the
good analogy.
Yeah, the bathroom, putting in an extra garage, an extra bedroom, then selling it back to the market.
Gotcha. And when you're talking about the kind of returns that's possible, I think what was also important to me is you mentioned that effectively the returns associated with typically investing into wine and whiskey is non-correlated to the actual, to sort of capital markets themselves. So it does represent quite an interesting alternative investment opportunity on the investment side. So I think it'd be worthwhile to give some examples of some of those investment returns that you've seen in some of the different produce.
Yeah, really good question. So I'll share a few things. There's an article that came out from Bloomberg literally yesterday, and it shares that champagne is beating the S&P 500 and gold as of right now this year, right? So that's one example. Another example is last year, there was a gentleman by the name of Bernard Arnault, who is the CEO of LVMH, and LVMH owns like Louis Vuitton, Moet Hennessy, Tiffany & Co., Christian Dior, owns like pretty much 80% of the luxury brands on the planet, Tag Heuer. And in a year where the S&P 500, I think, is down 19%, I don't think the ASX was down as much. The godfather of luxury essentially leapfrogged Jeff Bezos and Elon Musk in a contracting economy. So you got to ask yourself why. Why did luxury do so well when the rest of the world's doing so bad? That's because what I call the luxury economy is its own economy. It's in its own bubble. It runs its own race, because the people that are consuming the stuff, these goods, luxury goods, whether it's wine, whiskey, alcohol, art, classic cars, or whatever, they're usually on the advantageous side of an economy turning, or they've got just so much discretionary income. Their lifestyle never really changes, depending on what happens to interest rates or tax, whatever, right? So that's what we invest in. We invest in the top 1% of the market. It's about a $4 to $5 billion market, and it puts you on the sell side of these luxury goods. For example, you can't invest in Lamborghini because Lamborghini is a privately held company or whatever. But if you could, you might do really, really well, because everyone knows Lamborghini, the prices only go one way. They never give just discounts. We invest more or less in the wine, whiskey equivalent of those type of luxury goods. So that's what gives it that correlated. And there's also another aspect as well. So if you look at fine wine and whiskey compared to stocks and shares is zigzags. Fine wine and whiskey is very, very boring to watch. It just does that. That's all it does. It's sort of quite linear, not too crazy, but just pretty steady. And one of the
boring in a good way.
Yeah, boring in a good way. You want your bank account to be boring. You don't want your bank account to be up and down, up and down. It's crazy, right? So one of the reasons for that is that it's actually liquidity that creates volatility, because those spikes in the market, in the stock market, even in the property market, it's all emotion, right? But because wine and whiskey you can't press a button and sell your cellar, because you can't do that. The assets, hold true, because they're the last thing that people sell when they're in panic or when they need to fire sell. Yeah.
And another question I have is, obviously, there's, in our sort of conversations and, through you guys, there's, I suppose, two different ways that people, that investors can participate. There's obviously the fund, the fund method. And there's also the method where, effectively they can basically, engage with you guys. And I'll let you describe this a bit better than me, but effectively they can own it themselves, and they can sort of got that sort of bragging rights about what they sort of have in their portfolio. So give some perspective on the two different options and two different ways in which investors can participate.
Yeah, great question. So, if you were interested purely in financial returns and you're looking at putting in a minimum of 250,000, then you could invest in the fund. But if you wanted to have ownership of the assets, if you wanted to have your own collection, we also have an app where you can see your wine portfolio, which is really, really cool and sexy. Then we would recommend our private portfolio, which is basically for like private collectors. So what happens then is, for example, Steve, you might say, hey, Max, I've learned a bit about the assets, 12, 15% return in wine is pretty cool and interesting and sexy to me. And I wouldn't mind putting 20 grand in, $20,000 in. I'd say, okay, great, Steve, what's your timeline? He'd say, oh, look, I don't need the money for 5 years. But it'd be good to have an option to sell early if I need to. I just don't want to lose money, right? I say, I think I can help with that. And then you would offer me, whatever your budget is, 20, 30,000, and I go build a portfolio for you, right? And this portfolio would be, custom built based on what you, when you want to exit. It'd also be custom built based on the best opportunities in the market right now. Like I said, Champagne's a good opportunity right now. Napa has some good opportunity right now. Italy and of course, French is always good for wine investment. And then what I do is I build a portfolio of, $30,000. And then that portfolio within the price, we would help you to cover and we would absorb the transportation costs, insurance costs, and storage costs, right? Because we're a wine wholesaler, we can basically get these prices under market value, usually 5-10% below. So you'll have more or less a quick win in your portfolio. And also we'll help you to manage it for when you're ready to sell. So we actually have a fine wine bar, rare whiskey bar. We sell e-commerce in London. Which is like the Formula One for wine and whiskey in the world. Every winemaker wants to be there. It's the biggest stage, like the Broadway. And all our fees would be 10% of the net profit that you make. So if we turn 30 grand into 50 grand, we take 10% of that 20 grand difference. So we take 2 grand and you take 18, right? You take 48, and that's what we do. And we were doing that for about 9 years. Our return profile over the last 4 years was 11%, 12%, 15%, 15%. So 15s in the last 2 years. And, we just won a few more awards for being, leading wine whiskey investment consultancy in the world. So that's what we do, and we love what we do. Just
give some context, because the other part I found really interesting, because typically when someone's buying into an unlisted asset, which it obviously is, there's always that concern about, okay, if I do want to get out, if I do want to sell, what I'm holding sort of 2 years in instead of 5, because there's, for whatever reason, what are different avenues? You mentioned that you go and sort of sell on behalf of the investor. What are the sort of different avenues that you guys have to actually sell the assets?
Yeah, great. So this goes into our moats. We've got about 10 different moats in our business. So we have a list of about 3,000 collectors drinkers. And all of them can buy freely on our app. So we have an app. So the app that you use your portfolio is also a shopping app. If you're based in London, we have an exchange coming out later this year.
Wow.
Yeah. So it will be creating frictionless, trading of these assets, between investors if you want to, or to just buy in. And we also have, like I said, we're the only wine whiskey investment firm that has an actual physical presence. So you can go in there and meet us. There's a lot of these investment companies, like it's a guy on the phone, faceless company almost. So we don't want to do that. We want to be as transparent as possible. So we have a bar that you can go into, and it's a bit like a wine museum. It has like £1 million worth of wines on the walls, as art pieces. You can go in there and drink, and you might be liquidating someone else's stock, and you've had a glass, and it's all really good stuff. And we also do, partnerships with events, like polo events or like big conferences. We might champagne to like an art gallery. So we do like some corporate stuff as well. And but if you have, for example, if you invested $50,000 or more, you would get some really, really good rare stuff in your portfolio. That would give you more liquidity, so to speak. So if you want to exit your wine collection, your whiskey collection, think of it as like selling a house. It is a physical asset. It's also independently valued and insured.
Yeah.
So when you sell a house, you don't expect to have money in your bank account, a week from now. You've got a selling window. And the longer the more patient you can be when you sell, the better price you're going to get. But if you're like, hey, I want to sell it now, then you're going to take a haircut. It's exactly the same, right?
Makes sense.
Yeah. And in terms of, for example, if you invested $50,000 or more, we'd be able to put some really good bottles in your portfolio, because the bottles start to get into obviously the high price range.
Yeah.
And the better bottles sell faster because they're better. For example, the better bottles, it's like owning prime real estate in, Double Bay. That's going to sell fast any time of the year, any economy or that sort of stuff. And, if you have really, really good bottles, we could even sell it to like another wine store, because they might say, I need that bottle. I can't find that, It would be that rare. So there's like a sliding scale. It's very, very similar fundamentals to real estate.
And just for investors, I suppose, that are interested in sort of trying to understand more and learn more, where can they go to get some more information?
Yeah, really good question. So I can share my email. You can email me directly. I'm basically the head of Australia for OENO Wine and Whisky Investment Australia. And also, if you want to find me on LinkedIn, our website as well, you can download our brochure straight from the website. Just go on there, oenogroup.com, and you'll be able to download the brochure and we can chat more.
Brilliant. Max, thanks so much for your time. Really, I said when I first had this discussion, it took me sort of in depth. I was absolutely fascinated and realized that this was such an interesting opportunity, and also the amount of money that sort of goes into this from an investment perspective. It's said to be, said to have 100 team members across the area actually doing this. It gives you the size of the actual, of basically how much demand there is. So thank you so much for your time.
Nice, my pleasure. Thanks, Steve.